This is Andrew Stotz of Stotz Investment Research talking about Hong Kong. Let's take a look at the market, and what do I see? Moderate momentum and weak profitability. There's four aspects to what I'll look at in this presentation. The first is GDP. So let's take a look in more detail, and what we can see is that overall GDP is slow. The drivers are primarily private consumption, which is 0.95% of the 1.56% in growth over the last 4 quarters. The laggard is investment, which is contributing the least. And if we look at the next part of this, we can see some country information. First of all, the population is about 7 million right now in Hong Kong. The GDP is about $310 billion US dollars, and GDP per capita is about 42,000 US dollars. So obviously a developed country. The market size is about 2.8 trillion US dollars. And market volume is about $4 billion a day. So let's see what we can see here. We can see that earnings have yet to recover from the fall in 2015. Analysts are expecting them to be up about 1.1%. ROE, well, it's the lowest in Asia, but offers the second highest dividend yield in Asia. Now let's continue on to our 4 elements, and overall we can see that the ranking is worst. It's a very poor ranking based upon our FVMR basis. And fundamentals, well, lowest ROE in Asia. Valuation, it's moderately cheap due to the low price to book. Momentum, moderate. Earnings fell about in line with the rest of Asia. And risk, well, it's relatively high beta and gearing at about the Asia ex-Japan average. Now let's look at the market's performance, particularly the sectors. First thing we see is the top 3 sectors in Hong Kong are real estate, which is 16% of the market, financials, which are 16% also, infotech, which is 13% in China. 8 shares account for 13%. Now, what we can see is that the best sectors are materials, which was up, and this is over 3 months. Materials was up about 8%, and the company Future World Financial Holdings was up 93 or 94% from that group. The worst performing sector in stock was telecoms, which was down 9%, and SmartTone Telecoms Holding was down 17%. So there's a wrap on Hong Kong, not a particularly attractive market at this time. So I appreciate you coming to become a better investor, and also you can get additional articles. Join our free newsletter. Just go to becomeabetterinvestor.net/join, and I'll see you there.